It's been a long time.
Thanks, Alex.
I just wanted to dive right in here on that $5 billion debt reduction. Are we learning anything about what you learned from COVID in terms of how to manage debt in the future and how you think about your capital allocation?
Well, it really hasn't changed, Alex, for our company. We've been working on every aspect of the company, and today we announced this, as you described, a $5 billion over 5-year reduction in our debt. We've already got a very, very strong balance sheet, 1 turn of cash flow to net debt, but we took on a little bit more debt through the Conoco acquisition, and this is the opportunity to take some very legacy, high coupon bonds that we have out in the future, refinance those, bring them forward, and then combined with some natural retirements over the next 5 years, take our balance sheet and make it even stronger in this volatile commodity price world that we live in. So it's really one aspect of working on every aspect of the company. We announced some incremental share buybacks today through our Synovus equity, but working on every aspect of the company post our Conoco deal and all the attraction that deal brought with it for the company.
I guess that's my way of asking. Does that mean that you see a more volatile oil environment and prices that aren't going to be at $70 WTI for the foreseeable future? Like, is that also what is behind this?
Well, we've preached volatility for a long time. That's what we have to expect in this business. And while we're getting some stable run of prices here recently, it's really artificially propped up. Demand is still off a little bit. The excess supply is being held back by the OPEC Plus group. So really the market hasn't had a chance to rebalance itself completely, but we have been able, thanks to the efforts of OPEC, to maintain some stable production. But we always think in this commodity business that it's going to be volatile. We believe that's going to still be the case. And the real question is, how do you run just as well at 40 and 50 as you run at 60 and 70? The business isn't as hard at 60 and 70. It gets really hard in that $40 world. And that's where we've really set up the company to be successful in that $40 world. We don't know what prices are going to give us. We just got to be prepared for that volatility.
Yeah, you don't necessarily know what you're going to get, Ryan. I am curious here about what happened down there in Texas and how you managed to sort of balance things out during the quarter here, both with regards to your natural gas operations and your production operations.
Yeah, it was a interesting quarter for us. We lost about 50,000 barrels a day due to Winter Storm Uri, but the rest of the portfolio and the lower 48 picked up. So we ended the quarter really at the top end of our guidance, which is really a testament to the hard work that our organization did. Natural gas got a little bit of wind in the sail as we came through that winter, really, really tough winter down here in the southern part of the U.S., here in Texas. So, yeah, our commercial results were improved this quarter as well, because we're a very large trader of these commodities, both oil, gas, and NGLs. So, yeah, it was a very strange year where it started the year, and, of course, the COVID pandemic. We went through Winter Storm Uri, but it finished the quarter pretty strong, and that's what we wanted to communicate to the market today.
Finishing the quarter strong, I'm interested in, Ryan, at the beginning we're talking about the debt repayment and how, of course, it built up because of M&A, but very well-timed M&A overall with Conoco. Do you think you'll look at acquisitions again in the future, or is that hands-off for now?
Well, I think our hands are full right now with the integration with Conoco, which has been a tremendous opportunity for the company. 9 billion barrels of under $40 cost of supply resource. We announced $750 million worth of synergy. We're well on our way to executing that, and we're really focused on that transaction. The capital efficiencies are improving every day. The avoided capital getting on the Conoco learning curve for our legacy Permian assets is improving. So every aspect of the business, the costs are coming down with respect to the transaction and the synergy. So we're pretty pleased with the way it's going. That's our focus today. But to your question, it really is. M&A is not done in this sector. We've got too many players doing the same thing. We've got way too many choices for investors to think about. So consolidation is going to continue. That's what's going to make it healthy for the company, and we're going to be around to play in that in the future.
That's great, Ryan. So let me just pivot off of that. Does that mean that you would be interested in focusing on the Permian, for example, or outside? Because if you break down the areas of where your production came from, like 75% was the lower 48 in terms of your earnings for the first quarter. So if you were looking, where would you be looking?
Well, we're pretty agnostic, Alex. We're really looking for the best rocks around the whole world.
But what rocks are you missing, Ryan? What rocks are you missing?
Sorry?
What rocks are you missing?
Well, we'd like to get more rocks in Qatar. We'd like to have another train in Qatar. We like what we see in the Permian. We like what we're seeing in our exploration results in Alaska. We like what we're seeing in the exploration results in Malaysia and in Norway as well. So we're pretty agnostic. It really is all about best rocks and lowest cost to supply. And if that's the true competitive advantage in this business, it's your people and it's the rocks that you have in your portfolio.
Let's talk about one part of that rock you just talked about, and that's Alaska. You're kind of waiting to be able to move forward in terms of your production in Alaska. It was something that you touted quite a bit a few years ago. The administration is not so friendly towards maybe drilling in Alaska. The industry is also facing potentially higher taxes, et cetera. Do you have to rethink?
You know, we've been pretty pleased with Alaska. It's a pretty low-cost supply. It competes well in the portfolio. We've been through this before. We've been through multiple administrations. We permitted stuff in the Bush administration, the Obama administration, the Trump administration, and we will permit stuff in the Biden administration. The difference in Alaska is all the stakeholders are aligned. The state of Alaska, the natives on the North Slope, all the main stakeholders want this to go forward. It's hugely important to the state of Alaska, and we've got a track record of over 45 years in the state of doing things the right way and doing it very responsibly. This is some of the lowest greenhouse gas emission production in the world today because we do it right and we do it responsibly. There is a lawsuit against us. We've had to stop and slow down a little bit, people testing the veracity of the permitting process. But the Corps of Engineers, the EPA, the Department of Interior are all behind what we've done and have weighed in with the judge as well. So it's a part of the process. We've been here before. We'll get through this again.
Talk about those departments. I'm going to ask lastly, Ryan, quickly on the administration and the focus on taxes. How are you looking at a higher tax environment as a corporate, as a taxpayer? Well,
it's certainly going to make U.S. companies less competitive. I mean, if you go to a 28% tax rate, that's the highest in the OECD, even based on a GDP-weighted tax code. So, you know, it's going to have an impact. Now, we're not in a tax-paying position for a couple of years, but certainly if this would persist, it makes U.S. companies less competitive. It impacts U.S. jobs. And ultimately, if it in our industry, it means you'll be importing crude from less secure places that have a higher greenhouse gas footprint. So in the end run, it seems counterintuitive to all the different objectives that the Biden administration has.